Section 22 addresses a recently discovered gap in the legislation governing advance pricing agreements. These agreements are formal arrangements between HMRC and taxpayers that establish how certain transactions, particularly those involving transfer pricing between associated entities, will be treated for tax purposes. The key issue that has been resolved relates to the definition of indirect participation in the context of these agreements. Previously, the legislation had a gap that prevented advance pricing agreements from being made in specific financing cases where parties act together in relation to financing arrangements. The amendments explicitly incorporate situations covered by Sections 161 and 162 of TIOPA 2010 into the definition of indirect participation for advance pricing agreements. This ensures that financing arrangements where parties act together are now clearly covered by the legislation. These changes harmonize the rules for advance pricing agreements in Part 5 of TIOPA 2010 with the transfer pricing rules in Part 4. Importantly, these amendments have retrospective effect, meaning they are treated as always having had effect. This approach protects taxpayers who have already entered into advance pricing agreements under the assumption they were valid. The retrospective application aligns with HMRC's previously published guidance in Statements of Practice 1, 2012, and 4, 2007, which already reflected what was generally understood and expected by practitioners. For accountants advising clients involved in financing arrangements where parties act together, this provides legislative certainty that existing agreements remain valid and that future agreements are explicitly covered by the law.